Alright, well, I tried doing a stream and YouTube just doesn't like me at all for some reason, so I'm just gonna do a video instead. How about that? Even though the video probably won't reach you until another couple hours later, I guess that's what we'll have to do. So let's just get right to it, shall we? First, I want to start with the dollar. So as you can see, the dollar is right at its wit's end. It is right on that, and it's been hugging that line for a while now, trying to break through that support. I mean, you can see it broke through just a little bit, and then it pulled back up. But I'm just seeing all bearishness from this. It's gonna take a while to break through that, if it is. But man, earlier I just keep seeing. Well, I drew this earlier, so I saw these two equal highs, right? So right after that, I drew the line that said it was probably going to go above it. It could probably hit this order block here and then return back down. It did get above it. Didn't get as high as I thought it would. Instead, it created more equal highs. Or somewhat, I guess you could say, more equal highs. So I thought it was actually going to pull a little bit more of a draw up this way. And even then, the day before that, it did the same thing, right? It had those three touches. It did the same thing, barely broke above that. And both of them happened about the same exact time. So, you know, this was happening early morning into right after London close. Same thing with this one, early morning right after London close. But we still haven't. And then here, I mean, basically, especially when I looked on my MT4, these are not red candles, right? This is just a big open drop area. So it just looks like the dollar just like flatlined and crashed. I don't know if there was, you know, to be honest, was there any, you know, news for that? Term dollar decline, yeah. See your agent shares hit record highs as investors bet on recovery next year. So of course the market is actually going up. The actual, you know, equities market, when, you know, the currency is just falling, and that's what typically happens. Whenever you see, especially like, you know, we're seeing the highs in the SPX right now, and I think we hit the high in the NASDAQ today. I'm not for sure about the Dow. I know we've pretty much hit the high the last couple days. I know we've gotten close. To be honest, I haven't been paying too much attention to the indices. I probably should more often, because that tells me if we're on a risk on or risk off scenario. But I know just by looking at them that we are in a risk off scenario, meaning that the dollar is declining. So there's ways you can look at the indices, and if, you know, one forms a high while the other fails to form a high, and it forms a different low while the other form, you know, if they're one's formed like this and the other one's formed like this, that's basically how you can kind of tell that you're on a risk off scenario. Risk on scenario, I think is what it is. No, risk off. I'm not 100% sure. Jeez, I should probably know my terms better if I'm going to make videos and try to educate people, right? But basically, if you see those kind of things, you are in a scenario to where the currency is not performing well, and you should see foreign currency do better. But if foreign currencies do better, then their markets shouldn't actually not do as good, but it just depends on, you know, how strong their currency actually is at that moment. Right now, what we are seeing, especially with the dollar being so low, We're actually not seeing the pound make as much of a rebound as we thought we would, considering it being right at the December 17th low, at December 17th high for the GBP. We are nowhere near that, so we can tell there's a lot of losing of the strength of the pound right now. But that being said, it is still on its way up. It's still going toward that liquidity draw, right? So you have these daily highs right through here. It's definitely pulling towards those, and it's trying to pull toward these two equal highs right here. So it's definitely having a draw towards those, and maybe taking a little bit longer to get there, just considering the dollar. Where it's at right now, but that's where it is drawing to. So I will be looking for buy scenario. Today I was thinking it was going to go down, right? Especially when I made the video last night, right around this time. I was thinking that the pound was probably going to make a little bit more of an up move and then go down further. Probably try to break the previous day's low, and maybe bounce off this line here around 1.3405. It did not do that. For it being a sideways day, I made quite a bit of money. So for anybody who hasn't seen my show, sorry I started off in a hurry, and for not explaining myself because I was frustrated with YouTube. But my name is Ted. I do bodies and wicks, and what I do is I try to introduce smart money and try to basically try to help people understand what smart money is and how to read charts using smart money. So smart money basically does two things whenever you're looking at a chart, right? Price looks to do two things, right? It looks to find liquidity, and it looks to balance, right? So those are two things. What is liquidity? Liquidity is where areas of the market to where people have either their buy limits, their buy stops, sell limits, sell stops, areas basically of support and resistance, I guess you could say, wherever those areas may be. Now, those support and resistance areas vary. That's why we call it, I forgot the exact term, but just varying degrees of support and resistance is what we look for in smart money. So, whenever I woke up this morning, I did have a sell limit set up here. Because I saw this order block. If we want to get down, I do want to get down to the 5-minute of this, because I made a couple hundred pips off of GBP today just selling, and in a sideways market. So for one, I looked over here, and so I saw this order block. What is an order block? That is an area. Not everything is an order block, but what I do is I look for the last, like if you see this big up move, right? You see these four green candles, right? I look for the last down move just before that, right? And then it pushes up really hard. So that tells me that there is an area of interest in this red candle that price is attracted to. Now, when it hits that, what I have been taught and what I will tell other people is that, and I don't know if, when you listen to ICT and he says, there's no such thing as selling pressure or buying pressure, it's just repricing, meaning that the central banks control the price. Some people say it's because that they put in enough effort, or put enough cells into that area. That way they can push the money down. They sell, right? They sell off. That way they can buy. Gives them a better position, right? But they can hold that sell, right? As that sell goes up, or that or actually it would be this buy is what they would be holding. They can definitely push and then buy. Once this buy takes off, they convince other people to buy, and then once it gets to the top, They sell right here, and then they make more money off this sell coming down. They hold this buy, right? So they hold that buy until it comes back into this area to where they originally bought, pushing it the opposite direction, faking people out, right? So smart money is waiting for the price to return to that area and then selling off. So that's what I did. I found that area of interest. I drew my line across, and so I put my sell limit across. I put my sell limit, and then once I put my sell limit, you want to have your stop above this area, because they could actually be buying up into this tip. So they're not going to try to get past that tip if the smart money is in this area, right? So they're not going to try to get past this tip, right? So that's why you put your stop loss above here. And sure enough, when I thought it was going to get down here, so when I woke up this morning around 5 o'clock, it was just below the daily low from the previous day. So I went ahead and exited the trade. I want to say it was a good, what was it, 40, 50, 60 pips, something like that. No, it was more than that. I wish I could. No, yeah, maybe, okay, 30 pips, somewhere around there. Yeah, that sounds about right. So, yeah, about 30 pips from there to there. And so every time, and so then I looked up and I did the same thing with this apparatus. Let's spread it out here, right? And look at this. So, but then I also saw these two lows at the exact same time. When I see these two lows, right, what I see below this is liquidity, right? What this means is that you have an area of interest being right here, people having their, what I would consider their, if you're going to put a long position, right, you put it right here, right? And then the retail people are taught to do this, right? To put your the next time it comes down into this area, to buy right just above it, right? But put your sell stop maybe just a little bit below it, because it shouldn't get any lower than that, because that's a solid area, right? It shouldn't ever get below that, right? Because that is your support, right? Smart money would actually go through that and take out those people who think that way. So I was expecting it to come down here the entire day. After 5 o'clock in the morning, after I woke up, I was expecting it to come down below this area, because I saw this area of liquidity. So every time it came back up, like in here, here's that last down move before the up move. So I sold, right? I sold, and then once it got down past the previous day's low, I noticed it was kind of lingering. I exited the trade, right? I was thinking, okay, maybe it's going to have one more push. It came back up. I sold. And so, what was that? Another, I would say about 20 pips, 25 pips. And then it did it again. And this time, it got a little bit closer. I was still expecting it to reach back down there. It didn't. It came back up. I had already put my stop loss at the previous day's low. That's what I like to do. So then by the time it made that move, again, that was another 25, something like that, 20 pips. And then it did it again. And I just kept expecting it to try to get lower. So then it came back up. This time I think I was putting my entry right here at this last green candle, because I saw it did have a little bit of wick above it, so that means it came back down and then pushed up one more time. So I was thinking this last green 5-minute green candle is going to be it. Sold off again there, and then I ended up exiting somewhere, I want to say it was around in here. It was around 1 o'clock, because it was not wanting to get lower than that. So again, another 25 pips. So that was a good 100 pips just watching GBP throughout the day. And then I think the last time I was about to sell was right around here. It was 3:30. Yep, there it was. So 1525, 1530 was right here. I saw it come up. It hit this here it is again. You have another you have a down move, then you have the up move, right? And there's that big displacement. So I was looking at this red candle. I saw it come up. It hit that red candle, and I was like, should I sell? I was like, I don't know. It's 3:30. By the time I could be holding it, it could end up being 4 o'clock, and something could happen, and it fly all over the place. So I didn't do anything after this, right? Unfortunately, I wish I would have actually continued watching the markets. Instead, my cousin came over. We ended up watching Kung Fury, or else I would have actually noticed that the dollar was failing miserably, and I would have put in a buy, seeing that it came down and jumped off of this actual order block down here, because now I started seeing it operate the opposite way after this happened. Of course, around this time, around 3:30, I don't pay attention to the markets until I get home from work, which is right around 5:30. So it wasn't around here. I should have noticed it earlier, but it was right here. Right here's the candle that you see, where you have it comes down, and you see it comes to the last up candle before the down candle. So this should tell you that it's starting to go the opposite way. So I wish I would have put in my buy then, but I was still thinking it was going to go down because of this liquidity area, right? And I'm still skeptical of this, right? But then again, like I said, with a dollar, there's those liquidity areas in the dollar too. But especially with a dollar hitting, well, let's see what it's doing right now, because it looks like it is just pounding that support level. It's not letting it get any lower than that support level, which is really, really odd. I mean, if it's just right there, let's see, it's just right there pounding it, and it's. But the thing is that you get something like this, and now it's allowing this to grow, right? So, and the thing is, I wish I would have paying attention a little bit earlier, because now I see that there's equal highs here, showing this that there was a liquidity pool just before that took off. So, meaning that since that is happening, right? So this is this is a perfect example of smart money right here. I see, this is wish I was live. So you see the dollar doing that, and then you see the pound also having this what you would think of as resistance. Well, the retailers are going sell, 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 sell. Well, as soon as they sell, the algorithm knows. The algorithm knows that it's selling. So the banks, all of them, they put in a buy, right? Because they know everybody else is selling, so they take them the opposite way, take them out, take their money out, right? So that's why it isn't important to think the opposite of what you've been taught, right? It's because if you see this and you see, okay, there's an equal highs, right? So this tells me there's a resistance zone. At the exact same time, there's a support zone for the dollar, and you look at this and you're scratching your head going, why is it going higher? That's because smart money is in play, right? Smart money is in play. It just I don't know. So that's the easiest way to explain it. So if we look over here now to the left, I'm looking for, but then again, okay, so now it hit this, see, I don't even know if I'd consider these well, I would consider this an order block, because you do have this huge displacement down. So now what I would be looking at is these three candles going up before it goes down, because again, that would tell me that the smart money is in here, right? Waiting for it to come back into this area. That way they can mitigate, right? Mitigate meaning they can sell off whatever they have, Let me try to change. I don't know if you guys can see these colors or not. I can barely see them on my screen. But let's go ahead and make them yellow. So it should be in between there, and then it should start selling off. Ooh, yep. So it did push up into that area, right? Hasn't gotten above that high. And then we should see it sell off. But where does it sell off to? That's going to be a good question, because I'm thinking it's going to be right here, right? This last push down before it took off, right? So, but is that balancing it, right? So that's another thing that price looks for. Is that giving it balance that it needs? Probably, because we went sideways for an entire day. But you know, since we are at and now pushing through, never mind. GU will actually probably go through, so it's probably if anything, holding on to those buys now that it held on to for such a long time, and now pushing more into those, is what we could be seeing out of this. Generally, you see it go the other way whenever it gets to these areas, but not always the case. So it looks like it's probably going through these buys. Now it's looking to break the next highs. Right, so here you have almost equal highs. You see these highs that are kind of coming up and with the next to this daily high. So that is liquidity right there, right? So now you have people that have their sell limits, right? That are going to be putting their sell limits right around there. So let's go short position, dude. And now everybody in the world thinks they're smart, and they're going to go, here you go. This is what's going to happen. It's going to come up here, and it's going to, you know, it's going to start selling, and it's not going to get past this because of that big spike right there. And what's going to do? Go right through it until it hits an order block of sorts. An order block being another point of interest. That's going to be another sharp move. The last move before it going back another way, but that has a huge spike on it. That's a liquidity run. I don't think that's an area of interest. I don't think it'll hit that and then turn around. It's a possibility. If anything, it might do it around the bottom of these two candles here, but then again, that would be short-lived, I think. Hit those, it may retrace a little bit and then go back up, right? And then it's going to eventually try to break these new daily highs. That's where it's headed to. So I'm just waiting for a good retracement. I'm not going to buy in the middle of that, because who knows, it could actually just start to turn around and start retracing. But what I will wait for it to do is get through that apparatus, probably hit somewhere, retrace, and then it'll probably end up buying at, you know, somewhere at like one of these levels right here again is where it'll probably end up being, to be honest. Not 100%, but we'll have to wait and see when that happens. EURUSD, I'm surprised this is not flying off the handle, but then again, yes, I am, because it is in the middle of a very congested, very congested consolidation area. So if we go to the 4-hour and we go all the way to the left and look at what happened back in 2018, right here, we are in the middle of this big murky sense of things, right? So it is coming up and it is hitting the bottom of probably plenty of order blocks that happened way back when, still mitigating price, and then still trying to figure out where it wants to go. So that's why I have these specific levels drawn out. Those are the areas I expect it to hit before it maybe start retracing. It looks like it may have already done that with a different level. It may have been this level here, which was a last push up before a down. Scroll through here and see if we can't find out where it's hitting, because I even have daily bearish order block, 4-hour order block, weekly order block, all of them kind of in the same area to see where it's going to be. And of course it broke its daily highs today. So I want to show you something, actually what I did earlier today that made me realize that this was going to be an up day for EURUSD. And it happened. You see how I have these equal highs drawn out right here, right? I drew these out last night, right? So this happened 10 o'clock, 11 o'clock last night, and I was just waiting for them to get broken. So it does get broken, right? It gets broken, comes back down. I don't wake up until 5 o'clock in the morning. I wake up, I see that it's been broken, right? I see this come back down. Again, here is one of those areas of interest that I tell you about, the down move before the up move. It is right here, right? So I see this happen, and it's at 5 o'clock. It is coming back down toward that area. As soon as it hits that area, I buy, because I knew as soon as it hit that area, it was going to go the opposite way. So boom, it hits that area, and the reason I knew it was going to go the opposite way was because, one, we had the liquidity draw here. It drew above the liquidity. It beat the high. I had the daily high drawn out from the day before. It already came up and beat out the daily high from the day before. Even though it got below this low, it didn't get below these lows. It didn't get below these lows. You could clearly see it was on an up path, right? And even though this didn't get high, you could kind of tell it was on its way up. So it does that, right? It gets up, and I see that it breaks this weekly order block, and then I'm actually on my way to work, and it is right around here, and I see it. Let me push this out so we can see these a little bit better. It pushes down extremely hard. I just see this big push down, right? And it wasn't until here I buy again. And as soon as maybe it was this candle, maybe this, no, it was this one, definitely this one. It was this one, 750. Yeah, I was definitely on my way to work. At 8 o'clock I was already there. 8:10 I was already in my seat. 750, it pushes down, and I buy here again. And so whenever I bought there, I get to work, I get in my chair, and I look at this, and so I drew out this to this, right? And I knew that this was definitely the apparatus to look at and to see where it was going to go to next. And I knew the double of this was going to, right here is the double extension, is this -1 right here, right? So you see this -1 stretch across, and I drew my line right there, and I said it's going to go here. So here is where I put my take profit. So I'm still holding this buy from down here, right? Or this buy from right here. I'm still holding that. I add in a second buy, and I'm still trying to figure out where it's going to go. And then that's when I drew that out. I drew out the double, right? And I looked at that, and what I also looked at was, if we look at a little bit further to, it's going to take a little bit longer if I do it that way. But here, let me go to the 15-minute really quick. What made me draw out that line was, jeez, where is it at? Here we are. So this was the line this morning, right? So I was looking at the highs from last time. So it was right across the high from last time. I said it's going to break that high. So, and that's exactly where that one was. So I was like, this is this is confluence in the market. This is smart money you telling you where it's going to go, right? I didn't expect it to get up here, but I definitely set my take profit right around that high. I knew it was going to break it. I didn't want a chance on it, getting just a little bit above it and, my spread not being able to make it. So I put it just below that high, right at this. I think I would put it at 122725, just below it. So there I had two trades in that ended up being both positive at the same time. So went from here to here. So that one was 30, and I want to say the second one was about 15 or so. Here, yeah, it was 20. Yeah, around 20. So I made about 100, over 100 in GBP USD and 50 in EU today. And then I didn't really pay attention to EU after that because I was watching GU, trying to see if it was going to go down and break that low. I knew EU was going to keep going higher, but it was hard to read in this murkiness that I couldn't really do much with it. EG, I should have paid more of attention to, but with both of them being sideways, there was really nothing I could do with the EG today. I just didn't even want to look at it because they were. I mean, I did look at it, and it could have been the same thing I did with GU, but I didn't really have an idea of where it was going to go. I thought GU wanted to go down, it didn't. I thought EU wanted to go up, it didn't. So, and then same thing, with EG, it just went sideways, and we're still going sideways with EG, which is strange, because, well, I guess they're both, EU and GU are both going up, so EG is kind of fighting with itself. And that's how I kind of read EG, is I read GU and EU, and then I'll take that and see what's going to happen into EG. I really don't read EG by itself. I'll read GU and EU separately, and then that's how I read EG. Crypto. Let's jump over to crypto. What happened with XRP today after the announcement of all this stuff that that it's going to be getting off of Coinbase and whatnot? It drops down to as low as almost 7, or a little bit as lower, 17 cents. And then it jumps back up to 25, or almost 25. And then it drops back down again. And the funny thing is, when you look at this apparatus, it looks very, very familiar, or this very small apparatus, to the same kind of apparatus that happened whenever it got up to almost 91 cents or whatever it was, or definitely above the 70 cent mark. It looks kind of like that apparatus. Now, I watched some things yesterday about XRP, and there was a huge pump in it on purpose because people were they knew this was going to happen. They were trying to protect the price. I don't believe any of that crap. This was definitely a smart money move. This was definitely just people taking control of the money supply and having their way with it, and taking out any kind of CFD trader that they could, while also taking out people who put in any kind of money in the market, in between the time that it was going up. Everybody had the fear of missing out, so they start putting all their money in right when it hits 60 cents. And then next thing they're trying to swap it out whenever it hits 30 for something else, and they lost half of whatever they put in. So that's, and people will think, well, what's the benefit of doing that? Well, to make money. They definitely took control of this to make money. And that's why whenever I said this is a couple days ago, I said it's going to get below 27 cents before it makes a bounce back, and it did. It did, but the bad thing is that it didn't get much higher. So this is, if we get into the 5 minutes of this, That was not supposed to happen. Again, this little drop right here is what I had called for it to do, and then I thought it was gonna like we have here, right? I thought it was gonna drop down to that area, and then bounce back and then continue going upwards instead. But now look at it. Now we have a liquidity pool right here. So, and the thing is that I also saw that, people were looking up at, people who were holding it versus people who were not holding it. There's a lot of fear in people selling it off. People that don't have a lot of it are selling it off, but the people who do have a lot of it are holding it or buying more. So just because that the SEC says that the XRP is going to be listed as a security, whatnot, Coinbase is going to delist it, whatnot, you're still going to be able to get it. You're probably going to be able to get it off Robinhood. I think is the place that's going to be carrying it, just because they already follow through with all the the laws of purchasing securities and whatnot, rather than purchasing cryptocurrencies. So you're still going to be able to get XRP. There's still going to be value in this right now. If you're looking to buy, get now while it's dirt cheap again. Is my perspective on this. Because I think XRP will still have its utility. It's still going to be considered, a crypto coin, a cryptocurrency. They're still going to go after the large institutions. It's still going to be there. They're not going to be able to try to ruin XRP. Like I said, people who have a lot of it are just buying more of it. So I don't understand why people would try to sell this. I really don't. The only thing I did is I did trade off some of mine for something else whenever I did see it start to slip. But once I saw it get down to here, I traded it back. So I still have my XRP in hand. And the question is, where is it going to go to now? And somebody said something about, oh man, they made this video and I just wanted to laugh because they were like, oh, can you believe, there were 70% retracement, like Bitcoin had a 72% retracement the first time and XRP had a 73% retracement. This is called a shakeout. It's like, yes, this is what smart money does. That's what I look for. I look for 70% retracements, 70.55% retracements or more each time before I make a move. I'm not waiting for it to make a small 20% retracement before I put something else in. I want it to make a large retracement. You should want it to make a large retracement. That's what it does. That's what the market does, right? And if you think that crypto does not follow the same rules as Forex, you are somehow out of your mind. They follow the same rules. I've been trying to tell everybody this. It does the exact same thing as Forex. That's why people should study Forex and then put that into crypto, because crypto's a little bit newer, right? So it still has the same rules. It's a little bit different, but not really as much as you can see. If I'm talking about those same rules, with Forex, right? That last down move, right, before your big up move, where would that be in XRP? Well, that would probably be right in here, right? Right. So it's kind of consolidating, but then again, you still have an up move before you have the big down move. So what does it do? Comes right back down to that area and bounces off of it. And now it's buying again, right? What kind of retracement do you think that is? Generally, those are about 62 to 70% retracements, right? So if we are going to and there you have it, 70.5 every single time. Yes, 70% retracements are normal. You know, whoever made this video yesterday, I just wanted to laugh at them. It was some crypto podcast, and they had like 2.3 million followers, and he was freaking out and couldn't believe it that that it made this huge retracement, that the one that went from up to 70 cents, and then it made a retracement back down to 20 something cents, and it was a 3% retracement, and Bitcoin did the same thing, 72%. He couldn't believe it. And I was like, yes, that's normal. That is normal. The crypto people, I don't get you guys. I really don't. Study Forex first. Study Forex first. Understand the laws and principles of liquidity, of balance, and apply that to crypto, because it does the same thing, does the exact same thing. There's no difference. So please stop freaking out about you Bitcoin people. Like, oh man, you guys, you're something else. That's for sure. Like, you're naive if you think Bitcoin's just going to keep going forever. Yeah, of course, it can have a bull run, right? The bull run's eventually going to end. It's going to consolidate, and then it's going to dip, and it's probably going to dip even more, and then it could go up. It's rebalancing itself, right? That's what it does, right? If you think it's going to continue to go on to $350,000 a Bitcoin, good luck with that. Right? It'll, it may get there at some point. Before the end of the year? No. So just stop freaking out. Like, really actually study price action and understand what it does. And that way you can learn how to time the market. And people are talking about, dollar cost averaging. And how it's the best way to invest in crypto. It can be, especially for something like Bitcoin, but if you actually take the time to study smart money and to know what it does and how it moves, you can time the market perfectly all the time. All the time. And here is one of your times, right? XRP is probably a great time for you to put your money in, right? Because it has already made that another, big move, right? It is retraced back to 62 to 70%. It is at less than 20 cents. Why not? Right? Right now is a good time. I would think is a good time for a buy signal. This is where smart money would say, okay, here's where you'd buy. Right below this is where you'd put your stop loss, right? That's exactly what you'd do. Let's take a look at Ethereum. Ethereum made double highs, all right? So what does that mean for Ethereum? It's going to go higher. Simple as that. It is going to go higher. Boom. So there's a liquidity pool right there. So what does this mean? This means for CFD traders, they're going to put short positions in right here, right? They're going to tell you that since there is a ceiling, it is not going to get above that ceiling, right? And then what are the people that actually have control of the money supply of this going to do? Boop. Right through it, right? That's exactly what they're going to do. And anybody who's trading, right, and who's taking their money out at this point and then putting it into something else, the smart people are going to be going, well, see you later, and they're going to be buying the rest of it because it's going to keep going, and then that's all she wrote. So anybody who's thinking about selling Ethereum just because you see two highs, right? What it could do, what it might do, it possibly could do, is do one of these, right? Bounce down, right, really low, bounce back up to about right here, and then sell off, right? And if I was to say, if that were to happen, I would say that would probably be a 75% retracement, 70.5% retracement, 80% retracement. Yep, somewhere right between there. So it might go just above it, right? Because you also have people that put in buy stop orders. So this would trigger your buy stops, right? So it would as soon as it reaches that point, it buys it, thinking that it's going to take off, or people think that it's going to come back down, retest it, and then keep going. But then what it does is it pulls back and then takes those people out. So what that looks like for these guys is, instead of having a short position there, what they do is they put wrong thing, sorry, is that we'll put a long position in right here. Right, and they will have a very, very, very short stop loss because they don't think it's going to pull back. So what it does is, instead of it, what it does, it goes through here, it triggers those buy stops. Money enters the market. That's why it's called a liquidity pool, right? So as soon as it triggers those buy stops, money starts ticking, and then it pulls back, and then that money that was that in that pool gets taken out and gets put into the trader's pocket, who are going the opposite way, who are selling at this point, right? Stops at a certain point, pulls back, hits about 70%, 80%, and then sells after that. Oops, didn't mean to do that. Yes. Yes, geez. I had no idea what's going on. Okay. But I mean, that's a possible scenario. But I don't think that is the scenario. I think the actual possible scenario is this will continue to go up. I don't think it's going to do one of these, to where it's going to do this and then use this as the new support and then go on. That is complete retail thinking, and that is not how things operate. Instead, it will pull back further, right, and it'll find one of these areas, or it'll make a new area to where, here, let me just get rid of this and let's just make up a scenario of what could happen to Ethereum, right? So Ethereum does this, it pulls back and it goes up, it gets almost right here, it pulls back a little bit and then it goes up, right? And then it pulls back, and then what it'll do is it'll come down to this area right here, right? Because this was one of your last down up moves, right? So it could pull back to this area here and then continue going up, right? So that's typically about what you would actually see, because for one, it would still take out these people that have your stop losses or your buy stops, right? It would still take those people out, but still continue buying, right? So that is more likely the case of what is going to happen to Ethereum. So to be honest, let me look at it right now. Let me actually hide the EMAs. I don't like EMAs. I don't like indicators at all. I'm not an indicator person. Indicators don't do you any good. All they do is distract you. You can be your own signal as long as you study the market long enough and good enough. So let's see here. To see, this came down, and see when I was talking about Forex, you have those down up moves, right? Same thing happens here. Here you go. You have, oops, wrong one. Horizontal right. Okay. So here, right? Here you have a kind of a spike-ish area, right? And then it goes down. So here you have your last up move for your down move. So there's the area I'd be looking at for it to come down to before I bought, right? What does it do? Comes down to the area. What does it do? Buy. What a coincidence. And then what does it do? It comes back down to the area, and what does it do? Buy. Right? So whenever you're, especially when you're looking at the bottom of these, right? Whenever you're looking at these lows, right? Don't think it doesn't has to get to that low for it to be the support. It's usually something like this, right? That last push down before it goes up. That's what you look for. You don't look for the actual support for it to reach that before you buy. You look for the push down before you buy. That's what you look for, or the push up for it before you sell. So if you were to sell, right, you would be, especially if it got below this, right? You see this? Are you seeing this? I'm seeing it. After it gets below this, it pushes back up. What does it do? Sells. And then it sells right into this buy, right? And then once it gets back up into this area, what does it do? It sells off. But once it sells off, what does it hit? It hits the area that was last pushed down, right? So there's that last push down, so it buys, right? And then same thing happens over here, right? Here is your last push up before you're down, so it sells. And then where does it go? It goes to an area to where it is your last push down before it goes up, so it buys. And then sometimes you get stuck in a consolidation like this until it finally breaks out. So you just kind of have to, and first of all, you need to have a bias, right? So with Ethereum, I have a bullish bias, so I'm going to be looking for those areas of where it pushes down, right? I'm not going to be looking for those areas to where it's going to be selling from. There's going to be those areas, right? You can make money off those areas for sure, but I'm going to be looking for those areas to where it pushes down. Those areas pushes down, and when it comes back down to those areas, that's where you put your buys in. That's where you time the market, is those areas there. Boom, right? Every single time. And then sometimes it goes through them, right? So, but whenever you just kind of have to gauge what's happening, right? So you have to watch for it to break previous highs, right? So here, right, it did break this intermediate high, but did it break this long-term high? No, it hasn't. So here is where you have to watch for those reversals, right? But since it is equalish highs, I'm going to be watching for some kind of area, right? For it to get to some kind of area before it buys again. And I'm going to say it's going to be this area right here, 715. It could be doing it right now because you did have, I don't know. I think it's going to be 715 because there's not enough balance right now. It just kind of went up, went sideways, went up, it hasn't balanced itself out. I think it's going to pull down to 715 before it gets up again. That's just me. All right, so that is Ethereum. Bitcoin. Looks like we are doing some crazy stuff with Bitcoin again. Speaking of that, I don't know why the price isn't showing on Bitcoin. It should be showing on my screen, but it's not. I don't know why, but whatever. So, looks like I have drawn out the body of the high, right? And it came down to a body of a low. Usually wait for it to retrace to that again in between 62 and 70%. Again, these big retracements are normal, right? And then watch for it to sell off, and then usually try to hit the 100%, and then that's your first target. Now it looks like it's pulling back, and now we are back at that same level. Now, since we are back at that same level, I wouldn't say we're at equal highs, but we are at close enough equal highs, or close enough to somewhat equal highs that Bitcoin is going to have a draw on liquidity. That liquidity is going to be upwards, right? So expect Bitcoin to continue to go up and at least break the highs from last time. Like I said, don't be one of those people who expect, Bitcoin not to do something like this. The people that just think Bitcoin's just going to keep going up and up and up forever are the people that drive me insane. It's going to stop. It's going to have its resting points. Price cannot keep going up and up forever. It exhausts the market. It gets oversold. The market has to calm down. It has to keep up. You have to study price action. You have to know you have to just study Forex first, guys. Please, all you crypto people, study Forex first and then come to the crypto side and understand what crypto is going to do, right? Because they both have the same principles. They do. They really do. I wanted to check out urine, though, because I called something on urine yesterday. And I wanted to see if it happened. It did. It did. See, again, this is what I'm talking about. Yeah, let me see if I can even get close into here. I think I said it was going to get below a certain point. When did I make my video last night? Let's see here. Yeah, I guess it was right around this time. Oh yeah, okay. So I think it was because I said it pulled back to the 618 or 62%, and that it probably hit the top of an order block. So I said now should probably be a good time to buy for urine. Oh yeah, that's what it was. Is that you had to draw on liquidity here. So now you have double highs here, you have double highs here. So you have two draws on liquidity on urine for it to pull up. I'm still expecting that. I think it hovering around this area is just biding its time. That's all. It's balancing itself, or it's waiting. And what usually happens, especially, is it'll fall really sharply, right, into one of these areas here. So I wouldn't be surprised, actually, especially you have a low here, you have another low here, so you have a liquidity pull here. So I wouldn't be surprised if you see it fall sharply into this box, like something like that, and then pull out really quickly, and then go up, and then beat both of those highs, and then you see that pullback. So that's what I would be looking for now with urine. Check out Litecoin. Litecoin just kind of chilling. It looks like all the cryptos are just kind of chilling right now for since the holidays are over, except for Bitcoin. That one just seems to continuously still have value. I think a lot of people are just not trusting the dollar. Since the dollar is going down, that's what you're going to see out of Bitcoin, considering it's the virtual dollar. And the rest are altcoins. Bitcoin was the first, so everybody's going to see Bitcoin as the digital gold. So Bitcoin goes, and then the rest follow. Bitcoin, then Ethereum, I think, is right there with it. And then, like I said, the rest will follow. Litecoin. Let's see if I can get a better look at Litecoin to see what could possibly happen with it. So, see, a lot of people would look at this, right? So a lot of Forex people, anyway, would look at this and see this right here, this top, right? You see it get above this top, but you see this little hump right here, and they see this and they say, well, this is This is going to be your, sorry if my screen just flashed because I accidentally hit hide instead of horizontal line. They say, well, this should, you know, since it got above this, this should be your support. No, 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 no. Now, it is an area to where, you know, it is a push up and then it does push down. But then again, you also have another area that does that right here too. So push up, push down. So I wouldn't be surprised, right? And also, you know, another thing I haven't really discussed with, and this is one thing I haven't really tested out with coins, but I mean they do the same thing. Is you got to look at the daily highs and the daily lows, right? Of previous days highs and previous days lows, because it's going to try to want to break one of them, right? That's just what price does. So, and that's why I draw out the daily highs and the daily lows. So here we go. So there's one. And let's just do text and, oops, not faily. I cannot spell for some reason. Okay. Jeez. All right. So Command C, Command V. There we go. And you at least want to look at the past 3 days, right? So looks like, you know, you had one day to where it didn't do either, right? But then the next day it did break the next day's low, right? And then just today it broke the previous day's high. So generally that kind of gives, especially when it spikes down like that, that kind of gives you an idea of where it's headed, right? So it's headed up, it looks like, because it went up, came down, and then now it's already, it looks like it switched direction to the momentum. You can do this without a MACD. You don't have to have a MACD. You can literally just look at the direction of the days, right? So your momentum is going to be going up. You don't have to have a MACD to tell you which direction the momentum is going. Right, and then instead of daily high, what we'll do is we will change that to gold, right? And then text, we will also go gold, and then we will do daily low instead. Now you look at this and you look at this apparatus and you go, okay, so the thing I notice with coins though is that whenever you do have those areas to where it does push down before it pushes up, it does, like with Forex, it'll actually, the price will actually get into those areas. With cryptos, they don't touch it. It'll get close, but it won't touch them. That's one thing I've noticed, the difference between Forex and cryptos. I don't know why. I really don't know why. Because the whole point of doing that in Forex is to mitigate their previous price, which means that you're holding on to that price. But I guess with cryptos, maybe you can afford to lose a little bit. I don't really know, but it doesn't always get into, like, you know, like here would be your mitigation area. With, you know, Forex, you would see it dip down into this area here before it starts coming back up, right? Cryptos, they don't always get back down into that area before it starts turning around and going back the other way. So we get into the 5 minutes of this. Go auto. See, and look at this. Oh yeah, well, that, of course, that's the daily low. That is the previous daily low, which is right there. And I'm guessing I didn't put the high on today's high, so because it hasn't really reached it yet. But it looks like price is pretty balanced right now. But you did have, right? Why is the daily high way over here when it should be right over here? And this guy probably should be right here. Okay. So now what are you looking at? You got the daily lows over here. Oh, come on. Help me out here. All right. So what I would be looking for, especially now that we know it already made a bottom, right? It came down, hit a bottom, and we know that bottom probably was at a push down area. So also consolidation areas are good areas to look for as well for that. So here it looks like you had here, I'm guessing it's this right here. So here's your displacement. It comes back down to this displacement, buys. Once it comes back down to displacement, it does it again. So there's your candle right there, because this apparatus here is your displacement, right? That is your displacement. So displacement comes back down into it, buys. Gets close to it. Like I said, cryptos, they don't always touch it. As to where Forex, it usually does. Gets close to it, buys again, right? So that's why I'm thinking we're going to continue seeing it go up. Question is where from, right? So again, it always tries to beat a previous day's high. It did that, or a previous day's low, right? It did that also. It looks like or at a previous day's low, right? So beat out a previous day's low, and next thing you know, it beats out a previous day's high, comes back down. It looks like here is one of those areas where it pushed down, right, before the push up. See this big displacement right here? Draw that out. Here you go. See these candles right here? Big displacement right there, right? Your push down starts right here. It takes a while. It may take a while, but that's where your push down is. It's right there. Look straight across. It touches that push down, starts going the other way, right? Same principles from Forex apply to crypto, right? Look at any of them, okay? That's it for me. It has been an hour. That is way too long because you guys aren't going to watch all of this. I know you aren't. But thank you for watching anyway. And if you can, please give it a like. And I shall see you guys soon. And remember to always wear your pants. Any advice or information on this website is general advice only. It does not take into account your personal circumstances. Please do not trade or invest based solely on this information. By viewing any material or using the information within this site, you agree that it is general education material and you will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by bodies and wicks. Its employees, directors, or fellow members, futures, options, and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets, as well as Forex. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell, trade futures, spot Forex, CFDs, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in any material on this website. The past performance of any trading system or methodology is not necessarily indicative of future results.